Now, another institution, the IMF, dark days, they say, are ahead for the global economy, according to the International Monetary Fund. They cut the global growth forecast, citing struggling emerging markets and the Eurozone's ongoing recession for the downgrade. Zhao Yun spoke to senior IMF officials to find out if the challenges facing emerging markets, such as China, should be a concern.
The IMF's gloomy outlook for the global economy continues as key emerging markets show signs of weaker growth and the euro area remains stalled in the prolonged recession. In its newly released World Economic Outlook, the IMF lowered its global growth forecast for 2013 to 3.1%, down from its last prediction of 3.3%. The fund also downgraded its outlook for 2014 to 3.8% from 4%. Economists from the IMF say the world economy is operating at three different speeds.
We have emerging markets where growth remains strong. We have the US, where growth is improving. We have Japan, where growth has improved. And then we have in particular the euro, which is still the euro area, which is still struggling.
While old risks like the euro debt issue and the sluggish recovery in the United States remain, the IMF says at least three new challenges pose additional threats to the global economy. The first is China. The IMF scaled back its 2013 growth forecast for China to 7.8% from 8.1%, and for 2014 to 7.7% from 8.3%. IMF chief economist Olivier Blanchard told CCTV that the projected economic slowdown is mainly caused by China's effort to rebalance its economy to emphasize domestic consumption over investment. The IMF warns that investment could decline before consumption grows strong enough to compensate.
I think the Chinese policymakers are very aware of the issues and therefore have no desire to tighten credit more than is needed and do not want to see growth go too low. So I'm not too worried about policy decisions. I think the Chinese policymakers understand exactly what the trade-off is. Whether they succeed in exactly getting the growth rate that they hope for is where the risk is.
The other threats identified by the IMF, the risk of Japan's radical measures to boost its economy and the disruption caused by Washington's tapering off its stimulus strategy that has made capital cheap and plentiful for U.S. banks. The IMF suggests developed nations should employ diverse strategies in managing their economies and recommends emerging markets pursue prudent structural reforms. Zhou Yun, CCTV, Washington.